Bitcoin ETFs have logged $1.8 billion in inflows over just the last 6 days. And as that volume ramps up, we're also seeing more interest in Ethereum spot ETFs. And of course, as we discussed with Matt Hogan yesterday, the likelihood of some other ETFs for other assets being approved. But that's not even the most exciting thing that's happening today. Obviously, the Genius Bill passed the Senate yesterday. And I have one of my favorite all-time guests here to join and discuss all of it. I've got Sandy Kaul, the head of innovation at Franklin Templeton. I'm so excited for today's show, guys. Let's go.
Let's go.
As I said, I've got one of my favorites here. I'm going to bring her right on. Sandy, how are you today?
Excellent. So nice to be here with you. Great to see you again.
We got you scheduled, and then I turn on Bloomberg, and there you are. Saying that the Senate Stablecoin Act critical, Franklin Templeton's call. I've got great timing today. As I mentioned to you today, I'm actually recording a podcast later with Senator Haggerty, which was just complete coincidence that the bill got passed last night and we have him today. But as you said here, Senate Stablecoin Act critical. It has now passed the Senate. It will head to the House and likely to the president's desk. I mean, how are you handicapping the success of the likelihood of success here, that it gets passed all the way through? And why then do you believe that it is so critical?
Yeah, I mean, look, I think we're going to get a bill passed. The House is always a little trickier than the Senate in many ways, but I think there's a lot of bipartisan support, and I think a lot of people understand that this is key to our remaining at the core of the competitive environment that's emerging globally. And it is actually something that's very beneficial for the US dollar as well, and that's always a goal of the administration. So I think that you will see support emerge for this, and it will get to be law. Maybe not right away, there might be some finagling, but that's Washington. But I do believe this is heading to the president's desk and will be signed in this year. So that's going to give us some real certainty around how to bring stablecoins in as a normal piece of our financial market infrastructure.
Yeah. And so why then, I mean, taking the 30,000 foot view, why is this so important that we get this done and that we get it right? So maybe it's a two-part question. First, why are stablecoins so important and why do we need them legislated on? And then we'll talk about whether they're actually doing it in the right way, or maybe there's some unintended pitfalls that could be in there, as it goes through the House.
Okay. Well, why is it so important? Is because what we're looking at is a transition that's happening in the way that our economy works, right? We have been in a account-based economy pretty much our entire lives, right? Banks, you have a checking account, you have a savings account, you might have a brokerage account, you might have a retirement account. These are all separate accounts, and each of these accounts is kept on its own ledger by whatever organization you hold it with, the bank, the brokerage firm. It's all very fragmented. We're moving away from that, Scott, to a wallet-based system. And that wallet-based system is one where all your assets sit in your cryptographically protected wallet. And if we want to move cash around in that system, that is the role that stablecoins are playing. It's bringing the fiat currency out of today's traditional banking system or brokerage networks, and it's moving it into this wallet-based ecosystem, which is where the crypto blockchains exist, where the cryptocurrencies exist, and this is why stablecoins are so important. They're both the on and off ramp, but more importantly, they've really become the liquidity vehicle to keep assets in this wallet-based system.
Matt Hogan gave me almost the exact same answer yesterday from Bitwise. Similar, he said, I don't think people are ready for the fact that everybody is going to have a wallet, and this is the way that we're going to interact. And hearing you say it really reconfirms that. And then I made the point, it's not just a crypto wallet. There's also going to be tokenized everything. So it's likely where you're going to also trade your stocks and manage your portfolio and take loans and earn yield. I mean, is that the future where we can literally get all financial instruments into one wallet, and it will be effectively blockchain will be the underlying technology of that?
100%. I mean, this is exactly where I think we're headed. And it's going to happen a lot faster than people anticipate, right? I mean, this isn't going to be a 10 or 20 year transition. I think that we're going to see more progress in the next 5 years than we've really seen in the last 50 in terms of reconfiguring the way that the financial markets work. The last time we had a period like this in our history was when they had the paper crisis in the late 1960s. And they actually then invented the whole system that we've been using for the last 50 years, using the leading technology of that day, which was the computing technology, right? And so that's what allowed us to immobilize and dematerialize securities. That's what allowed for the creation of these centralized clearing, utilities that we see, like the depository trust company. And that's what led to today's account-based system. So what we're really seeing is the next iteration and the next evolution of the financial market infrastructure.
Its depository trust company, the DTCC, is very publicly testing blockchain technology.
Right.
They're doing it right out in the open, effectively, I think, trying not to become the next Blockbuster or Kodak or Sears Roebuck, basically disrupting themselves before they get disrupted by the industry. Maybe that leads to the second part of the question I asked before. So we obviously have stablecoin legislation coming through, which I think is probably a reflection of how all legislation will progress through market structure and all these things. Do you think that there's some unintended or intended consequences that might, let's say, for example, choose favorite institutions over crypto incumbents, for example, right? Maybe
yes.
that's
a good question.
Things like that as we build this system.
Okay, so here's a couple that I'm watching from the bill, right? The first is that it's going to now draw a line in the sand, right? We have had certain stable coins that have been acting like tokenized money market funds by offering yield to their underlying investors. If you offer yield on a investment vehicle, there is a name for that, and that name is a security, right? And so, people are going to have to decide which side of this divide do they sit on. Are they a stable coin, in which case they are not going to be able to pay yield under both these legislation rules being put forth in the Genius Act, and already is the rule of law in Europe with the markets and crypto assets rules. Or are you going to be a security, a tokenized money market fund that does pay yield and that can act like a stable coin? And I think that this is going to help clarify that divide, and some incumbent players are going to have to make some decisions about which side of that line they sit on. I think the other unintended or intended consequence is that they did not categorically rule out corporations being able to issue their own stable coins or non-financial entities. They simply indicated that they have to abide by the same compliance and regulatory requirements. And that could really start to change the way that we see our economy operate when you've got major corporations like Walmart and Amazon talking about potentially issuing their own stablecoin. So I think that there is a lot in this bill that is really going to cause the pace of acceleration in the industry to shift and change. And I think you're going to see a lot of brand name players now really trying to stake out some ground in this stablecoin space.
It's pretty interesting when you look back at how just too early Libra was, because Facebook tried to effectively do this and then obviously got absolutely destroyed on the on the floor. They tried to rebrand a Diem and then effectively just weren't able to do it. If they tried to launch that now, although I've already seen some pushback with them talking about it, it would probably be compliant with this rule if they did it the right way, and we would already have the Facebook stablecoin.
Right, and the potential for partnerships, right, between the financial industry and some of these big corporate players is tremendous, right? We manage at Franklin Templeton through our Benji product, we manage a lot of stablecoin reserves, right? We don't care if that stablecoin is being issued by a corporation, by a bank, by a digital bank, by a third-party entity that's setting it up as its own business, right? We are looking to provide the management of the collateral reserve. And so it opens up a potential for a lot of partnerships, and a lot of those companies may be able to outsource and use the financial market ecosystem and infrastructure that we've built and that others are building to be able to offer these stablecoins. So it could also really embed the financial industry into the new economy in a different role than we've seen in the past.
So that's a great segue to talking about specifically how Franklin Templeton positions as being one of the first institutions that took this industry seriously and really started to build with all of this potential legislation and regulation in this new, obviously more favorable environment. One of those things, you mentioned the Benji platform, but this was big news. It was just released. Franklin Templeton launches patent pending intraday yield feature on Benji technology platform. So that's obviously a mouthful, but it shows that you're ahead of the curve once again on building this. How does this play into that longer term plan, the wallet that you discussed? If we know that all of this is going to come into one place and this is how people are going to interact, how do you build towards that future in a way that you know is going to be compliant with whatever legislation we eventually get?
Yeah, I mean, this is a mouthful, Scott, I agree, but this is probably one of the most consequential things I've done in my entire career, right? That's how important what this launch was last week. And let me explain why, right? So we know that, a traditional money market fund, right? An off-chain money market fund, there's three key parameters around how it operates, right? Number one, you only get to earn interest if you are a shareholder at the close of the day, right? So if you owned that money market fund during the day and you sold it before the close, you don't get any interest for that day. With a traditional money market fund today, you have that interest is accumulated and it is basically tallied up every day and it's only paid once a month. So you only get paid your yield once a month, right? And then the third aspect of how money market funds work today is, let's say I had money market fund shares and I wanted to transfer them to you. That is a process that could literally take weeks, right? I would have to fill out paperwork, like literal paperwork, not even electronic paperwork. I'd have to mail it in. I'd have to wait for a response. It takes weeks to transfer shares of a mutual fund between two people, right? What we have now done with the Benji platform is fix all three of those problems. Because we are creating the actual exposure to our money market fund through the token. The token is not just a digital record of our exposure, it is the actual exposure. We issue those tokens and we track every single trade that happens on blockchain. So we are able to put the shareholder record together second by second. And therefore, if you own our money market fund for 2 hours and 36 minutes during the day, you now get that 2 hours and 36 minutes worth of yield. And if you transfer those funds to me, I get them during the day, I start earning yield the second you transfer them to me. It doesn't matter whether both of us hold those positions at the close. We can now calculate the actual way that the shareholder record changes during the day. The second thing we can do is, because we issue the tokens ourselves, we can pay out yield every single day, including Saturdays, Sundays, and holidays. So instead of only getting your money once a month, you get it every day. And then third, because it is a token and it sits in a cryptographically protected wallet, you can transfer it to me and I can transfer it to you at will. In fact, our Benji app, which you can download from the App Store, right? You can set that up, and any other user that you invite into the Benji network that passes our KYC AML, you can transfer the money between them. You can transfer your tokenized money market shares just like you would use Venmo. So we have really used the new technology rails to bring the money market fund, which is one of the most basic instruments in the financial market ecosystem. We've used it to bring it into the 21st century and make it look, act, and operate like a stablecoin, but a stablecoin that does truly pay yield because it is a security and it is registered and it's regulated. So we're very excited about these advancements. It's really just the first time that we are really taking a big step forward in terms of applying blockchain technologies to the traditional financial markets.
It's interesting because, as I said, you, Fidelity, a few others we can argue have been very ahead of the curve and have building in this space. But even the slowest, I would say, turtles that we've had, and those who even fought it for a very long time, are seemingly jumping in now. JP Morgan introduces USD deposit token on Coinbase's Base blockchain. I did not have this on my bingo card in a million years that they would choose a Coinbase layer 2 to effectively build their own, we call it stablecoin or maybe not, but seems that everybody's gotten the memo.
Yeah.
So how do you stay ahead?
Well, first off, I think, what's interesting about the JP Morgan announcement is that a tokenized deposit is a way of just making your current checking account or your current savings account into a digital record, right? So, it is not really quite a stable coin or a token. It's just creating a wrapper around your account-based structure to be able to make that operate and interoperate on blockchain. So in a sense, this is JP Morgan protecting their banking franchise. Remember, I said with stable coins, the money comes out of these accounts. With this tokenized deposit, this is a move by JP Morgan to try and get people to leave that money in their account, because that's how JP Morgan makes money, right? So I think that this is a defensive play. And I think it's one that they're hoping can compete with stablecoins, but I just don't see tokenized deposits or tokenized liabilities, which is the other approach that the banks are taking, really having the same traction that stablecoins and tokenized money market funds are going to have.
And I guess pivoting slightly, I mentioned at the very beginning that we have had this just incredible streak. The streak's irrelevant to me, actually. I mean, 1.8 billion in 6 days. There was like a day off between that, and it was billions and billions and billions for a long streak before that. This has been the most successful ETF product launch by many multiples. It's not even close. And it seems that now, as more platforms unlock this, more people get access, it's only increasing. And that, even with all the things going on in the world and all the wobbles in financial markets, it seems like nothing really stops this train right now. I mean, you've obviously participated in this from the very beginning. Where is all this interest, do you think, coming from right now, and will it continue?
Yeah, in fact, I would say we're not even in the major ramp up yet. Like, this is still prior to us really seeing widespread adoption, right? So, and that's what's super exciting about this moment in time. So let me rewind for 1 second to when we launched these Bitcoin ETFs back in January of 24, right? There were two kinds of buyers that came in at that time, Scott. There were institutions that kind of understood the business case and wanted exposure to Bitcoin, but didn't want to go through the trust structures. And so they put money into the ETFs, so big institutions that had large sums of money. And then individuals who understand crypto and who have brokerage accounts and wanted to have that crypto holdings in their brokerage accounts. It goes back to that account structure versus the wallet, right? The big segment that was missing, right, where a lot of the wealth sits, in fact, most of the wealth sits, is the big wealth advisory platforms, the Morgan Stanleys, the Charles Schwabs, the Raymond James, the LPLs, all of these big wealth advisory firms. They have a different standard, right? They can't just put a brand new product onto their platforms in terms of what they recommend to their clients. And so they've had to see the track record build. They've had to see the operational processes behind these ETFs prove themselves out, which have both occurred. And they've had to start to see where these products fit in the portfolio, right? So the big move in the industry has been toward model portfolios, which bring together equity exposure, fixed income exposure, and alternative exposure. And these crypto ETFs are being used as a form of alternative exposure in these model portfolios. So if I give my advisor $100 and it has a 6% allocation to Bitcoin ETFs in it, $6 of that $100 is going into Bitcoin ETFs every time I add money to that account, right? So these model portfolios have just begun to emerge from the leading financial players like ourselves. And this is what is allowing the wealth platforms to now start to really put that out in front of their advisors. And this is just beginning. And I firmly expect that over the next 18 months, you're going to see more and more and more of these platforms add these products. It's going to be automatic allocations every time new money comes in part going to these ETFs. And you're going to just see demand continue to ramp up pretty dramatically, I think, for at least the next 2 to 5 years.
As interesting as that is for the Bitcoin ETF specifically, it's almost more interesting that so many platforms are now offering non-60/40 products, because even getting 6% alternative assets was unheard of not very long ago. I would always joke, people, aren't allocating to Bitcoin in their portfolio, but they're also not allocating to gold, which has been around, for as long as there's human memory, basically, and has never been a part of a classic portfolio, even though it's a great hedge and people love to own it. So getting that 6% and Bitcoin even capturing a part of that, that's the bigger story to me.
Yeah, and for us, like at Franklin Templeton, we have a ETF that we've put out called Easy Peasy that is actually a mix. So every ETF we issue, so right now that's our Bitcoin and Ethereum ETFs, but every other single crypto ETF we issue automatically gets added on a weighted basis to our Easy Peasy multi-coin product. So, this is a way to even diversify your crypto exposure. So I think we're just at the very, very beginnings of seeing this become a standard part of every portfolio.
And what happens when we get beyond Bitcoin and Ethereum ETFs? Because obviously we've seen some movement on Solana ETFs, XRP ETFs. I think everybody views them as somewhat inevitable considering the environment that we're in. Will those, do you think, be popular? Will they become a part of these portfolio allocations? Do you think that it'll pretty much be Bitcoin?
No, I think it's going to expand. I think that this is the future state infrastructure for the industry, right? Each of these coins that start to get this institutional traction are going to become the new growth stocks, right? This is like 1996 and saying, well, do we think Google is going to be around in 5 years, right? So these are the emerging growth stocks of our next generation. And I think that it will continue to expand beyond Bitcoin into multiple coins. And that's why we've created this easy peasy structure to be able to really include all the coins that are gaining traction in one easy to access place. But we also continue to see demand for individual coins. So I think the whole space is just beginning to emerge.
Love that. And what about the other side, which is taking the existing assets, our real world assets, tokenization, and bringing them into this ecosystem? We talked about it obviously in context of the wallet before. So we're sort of like spreading the crypto gospel now, and people are starting to buy these assets. But for that wallet that we discussed to become reality, we also need to start bringing in the entire world financial system and basically tokenizing it.
So this is where we need a little bit more regulatory clarity, and that's going to be the big unlock there, right? So right now, to be able to distribute a securitized real-world asset product, you need to have a special purpose broker-dealer license. This is something that has been extremely difficult to get. Not many people have gone out to really pursue it. And there's a lot of talk now about maybe rolling back that requirement and giving the more standard broker-dealer requirements to allow different crypto domains to list these securities. In fact, you saw there was an article yesterday about Coinbase working with the SEC to try and unlock being able to offer tokenized equities, right? This is the beginning of this move. And as soon as those rules loosen up and crypto platforms can distribute tokenized funds, that's when you're going to, I think, see a wholesale rush into creating more and more product from traditional assets, equities and bonds and model portfolios and alternative funds, private equity, private credit, infrastructure, real estate. It's all going to move on chain, but we need to have the distribution ability into wallets. And right now, that's what we're waiting for the regulators to clarify.
Yeah. So we're starting to see that. We've talked about tokenized treasuries quite a bit.
Yeah.
That seems to be maybe the lowest hanging fruit for tokenization thus far, that, take treasuries, tokenize them, offer the yield. It's pretty uncontroversial and easy. Why has that been, I think, the first thing that has become so popular for everybody to work on? And what's next? And then what will it take for a Coinbase to be able to actually sell those things? Right. So we've had conversations about it before. Maybe they'll tokenize securities, but they won't be available to Americans. Right. It'll be available on international exchanges for people who don't have access to Tesla stock in Europe or something. Right. But that doesn't get us to the future that we're talking about here.
Yeah. So I think that we started with treasuries because, again, to go back to this whole idea of the money market fund and collateral, right, is people like stable coins for being able to purchase things and to be able to keep cash and move it around in the crypto ecosystem. But stable coins as collateral are not quite as popular, right? Because you don't know for certain what's in those reserves. You don't know how well they're being managed. You don't know the duration of the reserves. You don't know how much liquidity there is. This new Genius Act will start to solve some of those issues, but there has been a preference for more traditional sources of assets as collateral. And this is why I think treasuries and money market funds were the first products to really migrate into the crypto ecosystem, because they are the standard products that are used for collateral in the off-chain world. I do think that the next stage is going to be at the most illiquid and the most liquid ends of the real world asset offerings. So I think you're going to see more and more tokenization of ETFs and more use of smart contracts to manage the create redeem process, to manage some of the operational processes around the ETF itself. And then I think you're going to see more private funds being tokenized and brought on chain, because you're able to use the blockchain to add a lot of operational efficiency and standardization around the data elements, the contract elements that just don't exist today in the private market. So I think that after this wave of kind of treasuries and money market funds, you're going to get these two ends of the spectrum. And as you said, like the availability of equities outside the US, that seems to be a popular one as well.
Yeah.
So I think that's kind of the pathway. And again, to go back to what has been preventing it has been in the US, what's been preventing it is this need for this special purpose broker dealer license. And if that requirement gets amended or it becomes easier to get that license, that's what's going to really open up this space in the US.
So we somehow got right up against time, and I know you've probably got to go, but anything I missed that you're excited about and want to talk about before I do let you go?
Yeah, no, I think we've covered some great stuff. And I just really cannot emphasize how much I think we are on, not anywhere close to the end of the growth cycle, but we are really just beginning to step on the accelerator.
Everybody loves to hear you're still early, so it's a good way. I think it's a good way to conclude the conversation, Sandy. Thank you so much, always, for coming on. Absolutely, I love having you here, and look forward to doing it again soon.
Great, loved being here. Thank you so much, Scott.
Thanks, Sandy. Amazing. It's incredible to have institutions like Franklin Templeton so passionately building and enthusiastic about the space and being legitimately early and ahead of the curve. I've been here since 2016, and it was always somewhat of a meme to talk about institutional adoption. It was like this pipe dream, and now we're seeing it happen in a matter of months across the board. And it just makes me laugh that JP Morgan is trying to capitalize on this, of all people at this point. Before I bring on Chris, obviously, we're going to talk about Aptos briefly. Perfect timing because of all the stablecoin legislation, everything we're talking about here. Payments on Aptos here, $30 billion plus in monthly stablecoin volume. Finality in less than a second. Fees, that's a lot of zeros, 5.5. 3 native USD stablecoins. Real-world payments at internet speed are no longer theory. Aptos builders making it real. As stablecoins obviously become the core of this global trading engine that Aptos has talked about, the thing that's going to matter the most is going to be how fast, cheap, and secure moving them is. Obviously, there's a reason that, as much as people dismiss Tron, that Tron has the most Tether and most stablecoin transactions, because it's fast, cheap, and easy. And as much as we would love for that all to be on Bitcoin, people don't actually care when they're somewhere. They just want fast, cheap, and easy. Well, Aptos is faster, cheaper, and much easier, and will likely be the future of payments. So as usual, they're an amazing sponsor. They've been a partner of mine for a very long time. Just ask you to check out Aptos. And now we get to talk about the market. Chris, it seems like we're never moving. We're going to $105,000 forever. People are going to lose their minds. We're going to get time-based capitulation. I guess we're at 104 now, though. It's pretty exciting.
Well, the fact that we, again, are complaining when we're sitting above 100,000 is kind of silly, right? But it's the same thing we talked about coming into this. Before we hit 100,000, we had multiple conversations where we talked about how people were going to get bored and complain about sitting above 100,000. At first it was, oh, look, it can't get above 100. It can't stay above 100. Now it's there and they're like, oh, look, it can't go any further. So, I mean, it's just people. It's just as human beings, what we do. I don't know. For me right now, I'm looking at this as potentially a triangle here, potentially completed. I do like that this 103,000 area here is kind of holding its support. That is the monthly pivot right there. But, again, prior to that, we do have this 100,000 area down here, which is, we had the big fair value gap here on the daily. It rallied up through it, get that low volume node, and it's continuing to do work, holding support there. So the way I'm watching this right now is potentially we are complete here, but we need a breakout at least above wave D there, which on this Bitcoin all-time history index chart is 108,986.15. If we can do that, that's going to signal, and this wave C kind of holds support here at, what is this here? At 102,758. So as long as that holds its support and then we break out above the 108,986, odds are triangle's complete. We're going to go higher. Break out above wave B up here. That's going to confirm it up there at about 110,617. And then based on, again, a little price action target, based on the height of this overall structure here, it gives us about 119,809 target coming off that. And so, and then we'll get complaints up there. It is what it is. If we do happen to come down and break down here below this 102,758, two things. As far as the triangle goes, one is maybe we have an A, a B, and then we're still working on C here instead of it being complete, in which case it needs to stay above wave A here at 104.30. If it breaks down below that 100,430, that invalidates the triangle pattern. And in that case, I'm looking for either just a sweep of the 100,000 area, so just like a move down and then back up, or if we get some real movement down through it that closes really well below it, we could potentially see this move to 94.5, 96.5 area here. But that's about as bad as I see it getting at the moment here. So, really at the end of the day, the movement down here would be a great buying opportunity, I believe. But, until then, we got to see, do we hold here and here on this movement? But, again, sideways, right? Sideways since back over here May 22nd. So just about a month now that we've been doing this sideways after making that slightly new all-time high there. Structurally, we can kind of see that this area we're holding at here, I can kind of pull it up here. Get off that there. There we go. Really just is kind of this area right here, right? So you have these moves up in here. So you've got this resistance right here. Works as support right here. And again, support here and support here. So this is, a great little area to be in. We're in toward kind of the mid-range upper half of that. So, again, a lot of positives looking here. We just need to see some follow through as far as Bitcoin goes. Now, when we're looking at other things, let me jump over here real quick to silver and gold. So silver, I've had this target up here. I've got this as one large flat from back in October of 24 until the spring down here in April of 25. And so based on the height of that pullback, again, we've got a pattern target up here around $41.34. And so we're doing we're making some good movement headed up toward that way. So I'm liking silver. And then of course, gold. We needed a breakout here above 34.4820. We got that. So again, based on the height of that pullback, we've got a pattern target up here at about 37.5940. Now, may be complete, may just be 3 of 5. We'll find out when we get up there. I may have to come back and finagle the count a little bit, but I think we should be at least looking up there almost around 37.60 for gold. So, just kind of looking for things. What do you buy in the market right now, right? Especially when alts are just continuing to have a bit of trouble. Well, so here's Sol, right? Everybody's talking about Sol. We've had this trade in down here, as you can see. We did make our move up toward that $187 area. We're pulling back now. I think there's a good chance we might break down here. And if we do, we'll look down here toward this S1 pivot at about 133.60 or so. That's about a 50% pullback on this rally. So it's a nice area to get to. That would be my initial target, and look for a rally up off that. But either way, what I'm looking for is a breakout above 168.36 to signal that that low is probably in and we're going to head up. If we can get down to the S1 pivot and get a reversal off there, that'll give us minimum expected wave 3 target up here around almost about $400 on that there. So I like that setup potentially in progress here. You're just going to have some patience if we can get this, bit of a breakdown here. Come on down here, reset maybe RSI, definitely reset stochastic RSI down here. Get to the S1 pivot, which is just, again, previous resistance support area there, basically. So I like that as well. Link's another one everybody keeps talking about. Again, locally, same idea. I think we've got a 1 and we're working on a 2. Looking for this S1 pivot here. Let me see. That's going to be right there around $12.12.5 or so against that previous kind of support resistance level there. Great area to kind of get it. Low volume node, 70.5 retracement almost. I mean, it's a beautiful area to get to. So I want to see if we can get that. Looks like we've got 3 down and then 3 down. So, double zigzag correction. So what we need is a breakout above $15.66.663 here on this chart to add confidence to that count. And what that means is locally here, then that would give us a, if we can get to that S1 pivot there, give us a minimum expected wave 3 target here of $30.89.5, which just kind of gets us up near this previous high up here with this larger degree wave 1. We've just had this great kind of structure as we've continued to develop here and head on. Worst case scenario, I think, is the idea that maybe this is just one large still wave 2 here. As you get your A, you get your B, and then you get your C here, in which case we would then sweep this $8, basically $8.08 swing low and do that. So if we continue down through that S1 pivot and we continue pushing down and you're getting kind of close to that wave 2, I'd probably look at that maybe being what it is. And then we'll get like a wave 2 here to kind of sweep this low here. But if we do that, I mean, this would be a huge reaccumulation range after a long time, accumulation range here. So this would lead to a very large move up if it were to happen. So, we'll see. But right now, we're going to just look there locally and see if we can't get that rally up off that S1 pivot and kind of head on up through there. Again, impulsive breakout and close above that descending resistance would just look really good. Signal that low is probably in. And it's right up there around the wave X. So, again, it's just all about patience. You don't want to jump in and say, oh,
there's nothing to do right now. Yeah. You look at these, it's like, you just got to go touch grass. Wait.
Yeah, exactly. But that's the hard thing, right? As traders, that's the hard thing. We don't like to sit around on our hands. But, sometimes it is what you have to do. A lot of people spent a lot of time complaining as price was rallying here on alts, during this period here. And they were complaining about it, still heading down, and it was going up. And so they missed their opportunity there. Here we are pulling back. And so it's just kind of continuing that same rhetoric until we start getting, some further movement out. I'm just a big proponent of people staying off the, social media. I hate to say it, but, if you're really trying to be an effective trader, and you don't have a lot of experience as it is, a lot of successful experience, it's easy to get caught up in the clickbait that's all over, social media and whatnot. And every time a news event comes, it's the end of the world, and the market's going to do this or that. But at the end of the day, as I've talked about for years and years and years, the trend's already established. Any kind of movement you get off a news event is reactionary. It's temporary. It's knee-jerk, right? You and I have talked about it multiple times on here. The unemployment number comes out, and it's a knee-jerk reaction one way or the other, and a day or two later, it goes back in the original direction of the trend. But everybody gets caught up in that, oh my God, this is happening today, this is happening today, this is happening today. And, it's hard to be effective as a trader when you're constantly just bouncing off what's happening on that daily news, especially if you're trying to trade a little bit longer time frame. So Just remember, trends are already established. News gives you, knee-jerk reactions, and then, price will revert back to whatever that trend happens to be. As far as like some other kind of alts, potentially we've got some set up here. This is CET, US.
Love those knife catches.
Yeah, exactly. So, we've got this level of support and resistance right here that we kind of fell through. We're at the S1 pivot. So this is where I would look for a reversal. It looks like we've got ABC, ABC and then ABC here. So it looks like an ending diagonal. We'll see. I'm not interested in just like buying just blindly because it's at the S1 pivot. What I teach, students to do is, traders to do is when you get to these higher time frame points of interest, in this case, the S1 pivot here, the monthly S1 pivot on the daily time frame, what you want to do is you want to zoom into like the 1 hour, and you want to look for maybe some reversal confirmation on that 1 hour. So maybe, you get in here and you go, okay, well, what are we doing down here? Are we going to get, well, first of all, we have a bit of bullish divergence, it looks like, happening here. So, can we get like 5 waves up and a pullback and a breakout, or something that you're looking for something on a smaller time frame that'll get you to it, right? It may come down a little bit further here. This S1 pivot here on the weekly is just slightly below where we're currently at with the S1 on the monthly, but that's I like to see that when you got your monthly and your weekly pivots almost aligning. That's a very strong level, and so we look for that reversal off it. Now, if you're on this one, if you can get it, a 1 or a 4 hour candle, impulsive breakout and close above this 0.108 level, that's going to signal the lowest probably in. If you're jumping out to the daily, again, you'd want to be up through these ABCs here. So like this swing high at 0.1067. So pretty much the same area. But that's what you're kind of looking for. A lot of them look like this, though not as far down. But you don't want to catch falling knives. You want to look for reasons to enter that makes sense, right? Here we are with Michi USDT here. Potentially complete here, but again, deep pull back into this. So, we want to wait. Now, if we can get a rally off here, if this can hold right here, right? We've pulled back more than 50%. That's nice. We're right down around that wave 4 area. So if we can get a rally up here that breaks out above, what are we looking at here? Yeah, this one right here. 0.0386. Again, that's 3 waves down. So breaking out above, that's going to suggest that this is corrective and we're going to head up higher. With this bigger count, you want to break out above, 0.0659 to add confidence to the count. But again, if we can get this breakout here above this 0.0386, you can potentially be looking for, 1, 2, and 5 waves up here around 0.0754, which is the swing high. Usually what we look for, we usually look for 5 waves up around the previous swing high. So I like the setup here, but again, I don't like that we're not reset here. So we could see this continuing to fall further. And if it does, 61/8 there at 0.0259, 70.5 at 0.0222. 78.6 is at 0.0193. And we have these levels because these are generally the levels that we look for reversals at. But that doesn't mean you just blindly buy the levels. Again, watch the larger time frame, look for it to hit the levels, zoom into a smaller time frame, see if you're getting some sort of reversal on a smaller time frame, something that you can confirm on a smaller time frame that maybe sets you up for a much more confident entry rather than just blindly putting bids there. Unless you're good with just, blindly putting bids in, understanding that you're holding potentially for a long period of time, maybe dollar cost averaging or something, that's fine. You can do that. But if you're not doing that, just putting blind bids in a lot of times is going to get you hurt. I don't know here. We got Bio USDT here.
They all look the same to me.
Yeah, basically. Now, a lot of these like Bio here are actually getting close to that S1 pivot. So it's right there at the 78.6. It could come down a little bit lower here to whatever that is there, 0.047. And so, but at the end of the day, what you need is the discount anyway for this 1 and this 2. You need a breakout above wave B. That's, 0.1025. but coming from that S1 pivot, that gives you 3 waves up here at 0.2133 and 5 waves up minimally at about 30.5 cents. So again, we're making a nice little wedge here, but again, it's patience, right? It's not, saying, oh, I'm going to just put my bid there and it hits and you go, okay, now we're going up. Because again, this could be wrong. This count could be wrong. There's always that possibility. And you don't want to, set yourself up and, put yourself in a bad position where you're just going to lose money that you don't have to lose because you weren't a little bit more patient and waited for a little bit more confirmation on that action. And I think that's really important because the bottom may be in here, but we've only had one push up and one pullback. We haven't made a higher high in this overall structure here. So, again, you want to put the odds in your favor when you're trading. Right here, same kind of idea. This is hype USDT. This one looks like we have 3 down, 3 up, and 1, 2, 3, 4, and then working on a 5th wave here. So wouldn't be surprised to see this sweep this low down here at $37.22 or so. And if it continues down further than that, I would generally, I think I would expect us to see a rally from around this 35.89 area. But the idea, though, and looking at the structure here, I think, is that we get a spring in this area, and then that carries us up higher to new highs up there, $50 and beyond. So, I mean, generally speaking, that's what we're kind of looking at with our alts.
I think that
slight variations, but basically, the game plan is find the higher time frame points of interest, zoom in on a lower time frame when it hits it, look for some confirmation of some sort of reversal on a lower time frame, and at least that increases the odds of success if you can get that, versus just kind of throwing a bid out there and saying, oh my God, we're going to go up from here, and then getting caught and holding for 12 months or 2 years or whatever.
For the rest of your life, and when it goes down 99%, good times. Yeah,
exactly. You know how alts work.
I do. I'm still holding a lot of them that are look exactly like that. All right, guys, give TX West Capital a follow. Obviously, check out his channels. His shows with Andrew and Tillman are awesome. Tillman doesn't show up for me; he shows up for you, so it's good.
I could say the same thing about Andrew. You know, he shows up in a nice shirt and everything for you. He looks like a hoodlum with us. He puts on a silver tinfoil hat.
Better beard. I just need a better beard. All right, guys, we got to run. We will see you obviously tomorrow, and Chris and I next week, man. Thank you.
Appreciate it.
I will see y'all soon.